Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 12th, 2025, and we're diving into the latest earnings report from Restaurant Brands International, the parent company of iconic brands like Tim Hortons, Burger King, and Popeyes. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Restaurant Brands International's performance, especially given their significant global presence and the strategic moves they've been making recently.
Revenue and profitability overview. Let's start with the top line. Restaurant Brands International reported total revenues of $2.296 billion for the fourth quarter of 2024. John, how does this compare to their previous performance?
Well, the company has shown a robust 26.2% increase in total revenues compared to the same quarter last year. This growth is primarily driven by the acquisitions of Carroll's Restaurant Group and Popeyes China, which have significantly contributed to their revenue stream. Additionally, their income from operations grew by 35.4% to $635 million, showcasing strong operational efficiency.
And what about their profitability?
Net income for the quarter was $361 million, which is a decrease from the previous year. However, their adjusted diluted earnings per share came in at 81 cents, beating the analyst forecast of 79 cents. This indicates that despite some challenges, the company is managing to maintain profitability through strategic adjustments.
Segment performance and strategic initiatives. John, can you break down the performance across their different segments?
Absolutely. Tim Hortons saw a modest revenue growth of 0.8%, largely due to increased system-wide sales and supply chain sales. Burger King, on the other hand, experienced an 8.7% increase driven by acquisitions and higher advertising revenues. Popeyes Louisiana Kitchen reported a 10.6% growth, benefiting from the acquisition of company restaurants. Firehouse Subs also showed impressive growth at 14.2%, thanks to increased system-wide sales and advertising revenues.
It seems like their strategic initiatives are paying off.
Indeed, the acquisitions and the Reclaim the Flame initiative for Burger King are key strategies that are driving growth and profitability across their brands.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the company's future outlook. What are the highlights here?
Restaurant Brands International has achieved a 13.5% growth in adjusted operating income, reflecting their focus on operational efficiencies. Their net leverage ratio stands at 4.6x, indicating a stable financial position. Looking ahead, the company has declared a dividend target of $2.48 per share for 2025, which is a positive signal for investors.
What can investors expect in terms of growth and strategy?
The company is focused on thoughtful marketing, operational improvements, and enhancing the guest experience. They aim to drive franchisee profitability and deliver long-term growth, which should bode well for their future performance.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 79 cents. How did the actual results compare?
The actual adjusted EPS came in at 81 cents, surpassing the forecast by 2 cents. This beat expectations set by the 9 analysts surveyed, highlighting the company's ability to deliver better than expected financial performance despite market challenges.
What does this mean for the company's stock and investor sentiment?
Beating the EPS forecast is generally a positive indicator for the stock, as it reflects the company's strong operational execution and financial management. This should bolster investor confidence and potentially lead to positive market reactions.
Key takeaways. As we wrap up, let's summarize Restaurant Brands International's performance. John, what are the key takeaways for investors?
In summary, Restaurant Brands International has delivered strong revenue growth of 26.2% and exceeded EPS expectations with an adjusted EPS of 81 cents. Their strategic initiatives and acquisitions are driving growth across segments. The company is also committed to returning value to shareholders with a dividend target of $2.48 per share for 2025. With a stable net leverage ratio of 4.6x, they are well positioned for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Restaurant Brands International's performance in the comments below.